Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today, we're going to talk about one of the most ambitious price projections ever made by a major global bank regarding Bitcoin. According to Standard Chartered, the asset could reach 135,000 United States dollars in the third quarter of 2025 and hit as high as 200,000 United States dollars by the end of next year. This new bullish outlook from the British financial institution represents a significant increase compared to its previous estimates, and it shows how the institutional market is beginning to internalize the real impact of Bitcoin, not just as a speculative asset, but as a global store of value with increasingly solid fundamentals. The shift in tone is important, especially coming from a traditional and conservative institution like Standard Chartered, which has historically been more cautious in its crypto forecasts. One of the central points highlighted by the bank is the idea that Bitcoin has broken the traditional post-halving cycle pattern. However, this time, the scenario seems different. The projection from Standard Chartered is based on several macroeconomic, technical, and structural factors. Historically, after each reduction in the issuance rate of new Bitcoins known as a halving, the price would surge strongly in the first few months, followed by a deep correction lasting around 18 months. Despite the natural volatility of the market, Bitcoin has maintained a relatively firm base above 60,000 United States dollars, even while facing regulatory pressures and geopolitical challenges. This suggests that the fundamentals of the market are changing thanks to the inflow of institutional capital, greater corporate adoption, and the arrival of spot ETFs traded on exchanges in the United States. For Standard Chartered, this indicates that the current cycle may be longer and more sustained, allowing BTC to continue rising without major interruptions, especially with the continued growth in institutional demand and increasing scarcity of the asset. These products allow pension funds, asset managers, and even small investors to access Bitcoin in a secure and regulated manner, exponentially increasing liquidity and demand. Another key element in the bank's analysis is the acceleration of institutional adoption and Bitcoin, its growing role as a hedge against inflation and global monetary devaluation. With governments continuing to print money aggressively and real negative interest rates persisting in many developed economies, digital gold is gaining even more ground as a viable alternative for wealth preservation. So with the April 2024 halving, the daily issuance of new Bitcoins dropped to approximately 900 BTC per day, meaning the selling pressure from miners has significantly decreased. In addition, the advancement of regulated infrastructure layers, such as custody services, index funds, and derivatives, is helping attract investors who previously hesitated to enter the market. Additionally, Standard Chartered also highlights the role of Bitcoin ETFs, particularly those recently approved in the US, as important catalysts for capital inflows. According to the bank's report, this new institutional environment creates favorable conditions for Bitcoin to surpass its historical levels and enter uncharted territory, which suggests the market is yet overbought and that there is room for further gains before any meaningful correction occurs. And Fidelity slowly shift their stance from critics to advocates of Bitcoin, its integration into the traditional financial system. Standard Chartered also points to technical and supply-demand factors reinforcing its bullish view. Combined with growing demand from both institutional and retail buyers, this creates a supply deficit scenario that tends to push prices upward. On-chain indicators show that large addresses have been consistently accumulating Bitcoin, while exchanges report constant outflows, signaling strong hodling intentions. Another interesting data point is the behavior of the RSI and MACD. For the bank, these combined factors create an extremely positive scenario, justifying its aggressive forecast of 135,000 United States dollars in Q3 2025 and United States dollar 200,000 by the end of 2025. Finally, although this projection may seem exaggerated to some, it reflects a growing trend among institutional analysts who are gradually revising their expectations for Bitcoin. Over the past few years, we've seen major names such as Goldman Sachs, JP Chase, BlackRock, Standard Chartered now joins this list with a clear and ambitious vision. reinforcing the narrative that Bitcoin has moved beyond being seen solely as a digital commodity and has taken on a central role in treasury strategies of major organizations. Of course, risks exist, such as changes in global monetary policy, unforeseen geopolitical events, or adverse regulatory shifts, but the overall direction appears undeniably positive. Meanwhile, investors should maintain discipline, monitor key technical levels closely, and be prepared to adjust their strategies as the market evolves. With such a high forecast coming from a respected institution, Bitcoin continues to solidify its place at the center of global financial attention, and the best may still be ahead.